Good morning, everybody. Welcome to the Locke in Your Success Options Trading for Income Weekly Update for June 29th, 2015. I can't believe that half the year is over. It's not even like summer here yet in New Hampshire. It's like 50 degrees outside and with a high in the 60s today. So, boy, so summer's going to come and go really fast when it does finally get warm. So let's get moving here. We have our disclaimer, and we're just going to let you know that the presentation is given for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, please be aware that the risk of trading options can be substantial, and make sure you understand all your risks prior to making any trades. Also, we do use hypothetical computer-simulated trades in the presentation that are believed to be as accurately represented as possible. However, live results may vary. If you are not yet part of our inner circle, come on over to our website at lockeinyoursuccess.com, join our mailing list, get your free report, The 7 Secrets to Becoming a Successful Trader, and sign up for this free weekly webinar. Also, take a look at our programs while you're there. You'll get the super simple spread trades, the M3, Bearish Butterfly, the Rock, the M21, and of course APM Squared will be available very shortly. Also stay tuned for our programs under development, which include the Trading Triangle book. We have an online Trading Triangle program that's going to be launched off of that so that we can serve more people at a less expensive rate. So that'll be a lot of fun. And also we're going to be looking at doing some directional stuff. And we have lots of other great stuff in the works as well. I'm going to put you on with my wife Sherry for a moment here, and she's going to talk to you about some neat things that other cool things we have going on. So hold on, please.
Good morning, everybody. This is Sherry Locke. I'm going to just quickly talk to you about the Lock Up Hawaii 2016 Challenge, and I want to show you our website, which is going to show you our website for the Hawaii Challenge is under Challenges, and then it is Lock Up Hawaii 2016. And so I updated all the targets yesterday, so they're pretty exciting. Some of those percentages are really getting up there. We have a high of 96% now, and now it's on the website, so you're able to, instead of downloading the spreadsheet, you can just come to this page and you'll be able to see it now in real time. So that is our Lock Up Hawaii 2016. And then also there is a special going on for the Bearish Butterfly, if you didn't know, and I have uploaded a bunch of videos that John's done in the past, and they're all here on his Bearish Butterfly page. So if you want to know more about the Bearish Butterfly, you can come to our website and go to this page, go to the bottom of the Bearish Butterfly page, and you'll see these 4 videos. And some of them are from 2011, so you can see that the strategy has stood the test of time there. And to order, SMB has set up their own bearishbutterfly.com website, and they're offering a limited time only 10% off until tomorrow, and also you get some bonuses with that, saving you about a little over $500. So you get some of the group coaching calls with that as well, as long as you order by tomorrow. So I just wanted to let everybody know about that. So I will now hand it back over to John, and he will take you through the rest of the trades.
Thank you very much, and let's move on and take a look here at the markets. So last week we were saying that, and I think we called the last couple of weeks really, really well actually. We called the breakout the week before last, and last week we were saying that the Russell was probably going to go to around 1295, and it actually had a high of 1296 and back off, and it backed down right pretty much where we would expect, right down to our support levels here. Of course, we have some news that's come out over the weekend. We have the Greece thing going on. That's probably going to pull the S&P down to support, which is likely to, at least intraday, break our support level here. If it doesn't, that would be very, very bullish for the markets. If it actually holds this level, then you'd be looking at probably a substantial move up here. However, if it does not, what's more likely to happen is we're likely to bring the S&P, and if you looked at the futures, it pretty much brought us right down to the 2070 level, which is our more primary support level. But the futures have since bounced quite a bit. But I wouldn't be surprised if the market tries to test that level unless something is resolved in the crisis. That's the most likely price movement here, is a pull down into the 2070, and we'll probably hold range sideways. That would be my best guess, at least until we hit this more primary trend line back here in this red area. So as far as the Russell goes, that will likely take us down into at least the 1260 level, possibly a touch lower. Maybe come in and start fooling around with this 50-day moving average here. But like I said, it depends on how the markets hold up today. We're kind of at a decision point here, and I have an if-then scenario. If we hold, we're likely to push substantially higher here in everything. And if we do not hold, then we're probably likely to come down to the 1260 area, maybe a touch lower. If S&P breaks support, it's going to get ugly. But I would think that the major institutions would try to avoid that. I mean, you might have a flush out period where it breaks for the intraday type of thing, but I don't think they like to flush people out and make money and drive the market back up, but I don't think they want to cause a panic either. So I think they're going to be a little careful on this one. So we'll see how that goes. But that's my thought on the markets going forward here. I mean, if you look at the Dow, we get the same thing. If you look at the futures, they tested down at the 17.7, about 250 points, which is around the 17.7 level. And if you look at the NASDAQ, this one's kind of an outlier. But if it's going to come down, it's probably going to be here at this 4,400 level. So you have a question on the coaching calls. The group coaching calls with the Bearish Butterfly are going to be pre-recorded from the group coaching sessions that we had early on. We had 3 years of group coaching sessions that SMB has recorded, and they're packaging some of those with the Bearish Butterfly program to help get going a little bit faster. And here is what we have going on in our trades. So we have a July Bearish Butterfly, which I just brought to Friday because there were no adjustments in this last week. We were just sitting, we were fully scaled into the position here, and the market back down to the center of our position. Because the market move up was fairly aggressive, I mean, we had a decent move up. We ended up getting triple scaled in. We had to do delta theta rolls. And I believe we even had a roll trigger point. So the market's up more than what the Bearish Butterfly tends to like. This does put us in a bit of a risky position if the market actually collapses on us or comes down. This trade will probably lose. If the market does what we think it's going to do, drift back to the 1260 area, probably bounce around a little bit, this should be fine. But the losing scenario here is a really aggressive move taking off either direction. I'm thinking as long as there's indecision in Greece and there's no final ruling on that, then the market's probably going to be kind of range bound for a little while. But of course, a decision either way could push things one way or the other. So up in the air with this one, good possibility we'll be fine. We're only looking for a $5,000 gain, which realistically from a volatility lift in a good day or two would do that for us. So that's what that position looks like there. And let's take a look at what else we got going on. We have a July M3 trade, which did get some adjustments. So let me go back to Monday here. Go to Monday at 1500. And let's take a look at our July M3 trade. This is what we looked like as of last Monday. We're outside of our tent. Our allowable delta outside of the tent is a tad high. We like to be around minus 50 there, so I did make an adjustment. I sold 5 1250 1260s, and that was actually the only adjustment for the week. So we did this to kick our delta down, and if we push all the way to Friday, we are at about break even. Our delta is at about minus 31. This is actually a really nice, healthy looking M3 position. A pull down today of 10, 15, 20 points would be actually fairly good for us here. So much more than that, it's going to be problematic. We're going to have to do some backing out of some of our adjustments. But as of right now, everything is looking really well here. And from that, let's go to our July rock trade, which is essentially the same trade. If you remember, we entered this as an M3. So let me go back here. Let me push into our July rock. This was almost identical to the July M3 trade. we had, I think the long strikes were probably a little bit different. We only had 4 verticals instead of 5. As far as I'm concerned, that's pretty much the same position. So on Monday, we were outside of our tent. We had some delta issues going on. This one a little bit worse because we didn't have quite as many verticals to start with. So we just did 6 1150s, 1160s, brought us into virtually an identical position of the M3 trade for the month. And if you come to Friday, this is going to look nearly the same, except because of the entry timing, we actually are up a little bit more money here. And here's what that position looks like. So those are the M3, the Rock, the Bearish Butterfly trades. We also have a V Condor in June, which again did get some adjustments on, I believe, Monday. So let's come back to Monday. If you remember, this trade was getting pushed to the upside also. By the end of the day on Monday, we were over our maximum delta limit here. I just want to look at our T-log here to make sure that we did this on Monday. Yeah, I actually did make that move on Monday. We're over our maximum delta limit. We also have a delta theta problem. We've already bought back 2 of these long strikes here at 1330. We're only allowing a certain delta theta to the upside on a V Condor, and we're not able to hold those ratios. And if I bought back more of these, I still wouldn't hold the ratios. So that essentially calls for us to be rolled up. Normally, we want to roll back these 1330s to 1350. Unfortunately, I have no credit there. So instead of rolling the whole wing back, we simply rolled the short strikes back. Then we rolled them back to 1340, and we sold 15 of them. So we bought 13, sold 15. We rolled these up 40 points, 10, 20, 30, 40 to 1170, and we moved our straddle, I believe, to 1260. Let's just move forward, and so that would be standard procedure here. Yeah, so we're up to 1170 here. We're up to 1260 with our straddle, and we're in a position that looks like this here. Much more healthy position compared to what we had before, and our delta theta ratios are actually decent here. So let me just pull into Friday. This is a major up adjustment for a V Condor. It's very rare you actually have to roll. In 2013 it wasn't very rare, but most of the time it's very rare that you roll one of these up. That just kind of tells you it's an odd market environment. So this is where we're sitting now. We're up about 2,500. We're sitting in a position that looks like this. Down move today is going to drop us down into here somewhere. We'll have to see if we hit any delta numbers, but we may end up making some sort of adjustment on this week. We shall see. August, we also had a V Condor going. Take a look at that. There were no adjustments to that, so I'll just show you Friday. This trade here as of Friday was up $379. And we were in a position that looks like that. So nice, healthy looking position, still in the center here. And of course, Friday was 56 days to expiration, so we were looking at entering a bearish butterfly. Through the market report last week, kind of should have had a clue that it was a good time to enter a bearish butterfly early. I was clearly noting that we're likely to go here and reverse. So the day we reached here, if you're an M21 trader, you're basically in bearish butterflies. This was a kind of a no-brainer reversal, at least short-term. So we were near 56 days entry. From a technical standpoint, very, very good entry point on a bearish butterfly there. That is kind of interesting. Let's see here, back to option view. So that was kind of a no-brainer entry. Friday was less favorable, but it certainly wouldn't be anything that would have stopped me from entering it. Here's what we looked like on entry. I actually entered the 1250s. We're at minus 104 delta, 81 theta, cost of 91.60. My delta is a little high, but I'm also a little more than normal behind the market. I'm actually 29 points. I had the choice of going 29 points or 39 points. I went 39, mainly because I'm expecting a move off of this level. So I don't know which way, but I'm expecting a move one way or the other, and usually you're better off further behind the market if you're expecting a move. So this is what this position looks like here. Obviously, if the market kind of falls apart, we'd have no issues at all with this particular trade. It'll look really good. And we also had an entry day for an M3, to which I used the same strikes at 1250s. I actually put in 2 verticals. I'll come into here. I used the same strikes. I put in 2 verticals because I remember our delta was a touch higher than normal. I bought a call here at 1110. And this is what this particular position looks like. This would not like a market crash, but it can still withstand a decent down move even though it's flat delta. So that is what we have for positions right now. And that's everything. So let's take a look at questions. Volume gives us a hint on price movement on stocks and ETFs. What do you use since we don't get volume on the Russell? Okay, what do we use for volume? Yeah, so you can use, and of course you offered some suggestions, TF futures, which is a very good substitute, and IWM. So TF futures and IWM are good if you're using technical analysis and you use volume analysis, which I actually do. I use volume analysis a lot, and the TF and the IWM are very good to use for that. I also pay attention to the SPY and ES volume as well as the NASDAQ and the diamonds, because those are relevant as well. Usually, if they don't always move in sync, but if there's going to be a major market event, I look for confirmations, or a major move, I look for confirmations in other indices, and that tends to be helpful. So next question is, for a fully scaled bearish butterfly, in case of a hard down move, what's the proper adjustment? Just removing the highest butterflies until what's the proper adjustment, question mark. And then there's another question, is it just removing the highest butterflies until the lowest one remains? And that would be, if you're in a bearish butterfly, outside of expiration guidelines, that would be the correct downside adjustments. So if you get fully scaled into a bearish butterfly, you're further than 21 days to expiration, then yeah, you scale down your size as the market comes down and go back to one butterfly. If you choose to use expiration guidelines, which some people choose to use them, some people don't, and there's no right or wrong, it's just you win or do better under different circumstances. If you choose to use expiration guidelines, you're going to scale down to 2/3 a position, and then you're going to start buying butterflies at a lower position. So if we go to the July bearish butterfly, if we start having a down move here, I'm going to scale out of these 1300s, and I'm going to start buying 20 under here, which is 1240s. So I'll literally jump the butterflies back over to here a little bit at a time, so in a gradual manner. That's for someone who's using expiration guidelines. Not using expiration guidelines, you just scale out of this till you're out of the trade, then move on. All right, if volatility has a big jump this morning, is it a good time to start on August V Condor? You would, Andrew, you would need to actually go in and price the composite, because if volatility comes up a lot, the straddle price also comes up a lot, and you need to see if the straddle price is properly offsetting what you are getting credit for in your vertical spreads of the condor. And the only way to do that is to price it over a period of time. What would be your entry cost today? What's your entry cost after the volatility move? If the SPX and Russell were to break down below the support levels, what stopgap would you use to protect your position, say, in M3? Typically, an M3 doesn't use intraday adjustments, so it all depends on your plan. So if your plan for your M3 is to ignore intraday adjustments, you wouldn't do anything until it's just business as usual. You wouldn't do anything until 3:30 or whatever your 2 o'clock or whatever your time checkpoint is, and then you would look at your position and make your decisions. If you have in your trading plan that you are going to use intraday moves, then I will typically use 2 times my normal delta. And some people trade that way because they usually don't. Some people don't want to allow it to go past a certain point. And what you need to do is define that point prior to entering the trade, decide what that is, and then just stick to it. I wouldn't use regular delta numbers. So in other words, on an M3, end of day delta, or checkpoint delta as we would, I guess, more appropriately call it, would be positive 50 for a 10 lot. I would not use that number because that's going to be too tight. You're always going to get chopped back and forth if you're using that number. But if you use 100, right, if you double size it, that's not bad. You'll still usually make out better. Not all the time, but you'll make out better most of the time leaving it alone. But if you, for whatever reason, and I know, Alex, you're kind of constricted by certain things as well to protect the position if it goes down a certain amount, then if that's the case, I would probably double my normal delta range before doing anything to the downside. Could you comment on call IV being higher than put IV at the end of the day on Friday? an option view. I wasn't looking at that particular thing, so it's hard for me to comment on that. But that is that's unusual. Typically, put IV is higher than call IV, but for whatever reason, the market makers happen to spike that. I don't know why. So does it mean anything? I don't see it meaning anything. I don't see it meaning anything necessarily. So things like that happen. I tend to ignore them. If anybody out there finds a good gauge for that or what it is anticipating, let me know. But I don't particularly pay attention to that particular thing. Even in our analyses with our option view settings, we just combine put and call volatility and just average them out. I found it was storing T plus 0 line of the position. Yeah, it very well may. Although if they're combined, it really shouldn't matter. But it still may distort it a little bit, even if they're combined. In which case, I do look at T plus 0 line distortion. So if the T plus 0 line, so he's saying that, yeah, we had a call and put skew different. I don't look at that. But he's saying, yeah, well, but that distorted the T plus 0 line. Okay. If it distorted the T plus 0 line, I do pay attention to that. So depending on how it distorted it, it would help me decide which way I think the market's going. Typically, if it distorts it in a manner to flatten it, the market's going to make a large move, often down. And typically, if it distorts it to make it more like to make a butterfly more negative delta, typically it is, especially if the market's coming down and it's distorting it that way, typically they're anticipating the market going up. There are other distortions that mean things to me, but I would need a specific example to tell you what I think it needs. So someone's showing me an example of the backwardation, right? They call it backwardation, right? When your call skews are higher than you put skews. And Ray's actually sharing in the chat an example of a screen of that. So if you'd like to see that, then go ahead. Thank you, Ray, for sharing that with us. All right, so if there are no further questions, that's what I have for this week. I hope everybody has a great 4th of July, so a nice holiday for us on Friday. The market, hopefully today, is going to be relatively stable. But like I said, if we have big moves, we just deal with it. So have a great week, everybody. Have a great 4th of July if you are here in the U.S. and you celebrate that, and we will talk to you next week.